Hello everyone, this is Ryan Mallory for SharePlanner.com. Today is March 5th, 2012. So, we actually got a little bit of a sell-off today. However, to date, I know I'm probably one of the few people keeping track of this, but we have yet to get a 1% sell-off in the market this entire year. Now that's a far cry from the action that we saw late in the year, but once we had late December roll around, the market's volatility dramatically decreased, and we're in this march higher that just seems to never stop. Support seems to never fail. Resistance just seems to get crushed. But today, despite the dip buyers that came back in at the end of the day, there was some signs of cracking. And I know I probably come from this as a bear. I do have some TVIX that I've been slowly accumulating over the past week or so. And yeah, I am holding it overnight. And no, I haven't gotten killed yet. But I do expect this market to pull back. Now, whether it's 100 points on the S&P or 20 points on the S&P, I really don't know. So far, we're about 10 points into this pullback. You can see here the highs back on the 29th of last month was at 1378, and so we're about 14 points off of that, I guess, is to be exact. But today we actually saw two support levels get taken out. The first one, you can see here, you got this trend line that has been just unstoppable for the better part of this year. I mean, actually the entire year, some of December as well. You can see here when we've been marching up, and the purple line is what I'm referencing to. We've been marching up. We haven't had a huge move away from the trend line, except for like here per se and here. But every time we go back and test it, and usually we have like a hammer, and then we march back higher. And today we actually had a break of the 10-day moving average, which has happened before. It happened on this date here, followed by a huge update the following day, which made the move basically irrelevant. So it's the second violation this year, the 10-day moving average. First time really didn't mean nothing. Second time, well, that just happened today, so yet to be seen. And then for the first time this year, we've actually broken this trend line. So do I think that's important? Yes, I do. How close we came though to actually testing this 20-day moving average. We were like the lowest 1359, and it went all the way down to, or the low of the day was at 1359. The 20-day moving average was like 1358. So we came like a point and a half from actually having a true test of the 20-day moving average. Some might say it was. I don't think it necessarily was. You also have this trend line that developed late December, a secondary trend line, a little bit longer term. Actually started in late November, I apologize. And you can see here we've tested it one other time, and then we just went way away from it. Bear with me because I know there's a lot of lines. I'm going to get to each one of them here, but they're all worth pointing out. But yet again, we tested it today. So this is the third time we've tested this trend line. The previous time we tested it, we bounced right higher, and it's been a couple months since we've tested it. So I do count that significant. Would have been much more bearish on this market had we broken through that line, particularly if we could have broken through the 20-day as well and closed below it. That would have marked a dramatic shift, but it does set us up for a showdown tomorrow. Either A, the bulls come guns a-blazing, or the bears are going to try to continue the little bit of downward momentum that was seized today and try to build upon it tomorrow. We're now about 3 of the last 4 days have been down 2 days in a row. We don't see that a lot. The last time we saw it was back here in mid-February. It's hard to call whether or not we'll get it again this time, but I still lean bearish in this market. I've seen these rallies like this multiple times. Not even multiple times, a bazillion times in my trading life, and every time they never end well. I mean, when they get so euphoric, where people like on CNBC today, I can't remember the guy's name, but he's calling for S&P 1700 by the end of the year. When you call that, when you see that kind of stuff, you can see the euphoria is getting away from it. When you see the kind of action that we've seen at Apple, which I'll get to in a second, I know Apple has a low PE, and I know that they blew out earnings, but you're talking about the largest company in the world moving up like 30-40% over the last few months, and I would love to see another instance where the largest company in the world moved up that hard, that fast. I don't know if it's ever happened before, quite honestly. Um, but yeah, my analog for tracking this market basically goes back to what we saw in, the January time frame of last year as well, where it went into about early March and then we sold off. In fact, the first two weeks of March, except for 2010, is is usually dreadful for the market. So we're sort of seeing that here already. If you look at the Russell, you can see here that the price action is much more bearish. We broke through a very strong support line here at the top. You can see here this is some distribution that has been taking place. They are oversold, so the bounce that we saw today is not all that surprising. It sort of kept the market, I guess, from getting too out of hand because the money seemed to be flowing out of the S&P and going into the Russell. So you can definitely see the bulls aren't willing to throw in the towel yet, but at some point it's going to happen. It's like I referred to in a post earlier today. It's like the kid that's sleeping, or the kid that refuses to go to sleep, the little toddler, and it's dead tired. You can tell, and it's fighting the sleep, and then boom, it drops his head in his porridge or his cereal and conks out. Unwillingly. He has no control over it at that point. It's going to be sort of like the same thing in this market where it can go up, 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 and everything looks like good, and then all of a sudden, like a thief in the night, man, the market just takes a hard hit, and um, every bull. That's the thing, and I mean, and I'm not against being bullish here. I mean, that's the trend that's really working in this market. You buy the dip every day, and it seems to work. All I'm saying is those that there's not a bull out there that doesn't think that they'll be able to get out before everybody else, and that's like impossible. There has to be people that get burned by this market. In fact, the majority will when this market does indeed turn. When that happens, everybody thinks they can get out first, and as a result, you create this mass like run for the exits, and it never ends good. Now, some will point to the hammer that we got in the Russell today. I'm not too freaked out by that. If you look at the IWM, it's not, and that usually shows the candle. It's the true candle in the indices. The indices themselves aren't great for seeing what the true candle is on a day-to-day basis, but on IWM, you get the true candle. It's a somewhat of a hammer, but it's not really a doji. So I would dismiss it as being anything bullish at this point. And gosh, I mean, you look at the volume that was been piling up into the Russell lately as this thing has been distributing and people are getting out. And then you look at the volume today; it just fell off a cliff. It was half of what we saw on Friday. So I wouldn't put a lot of stock into the Russell turning a corner here, and all of a sudden you should buy the dip, um, or that the selling is particularly over in this market. And even if we are at a top and everything, tops can take a long time to come to fruition. Or you can see things like in the bottom of like March 09 where we put in a bottom that was V-shaped. I mean, so you can see tops that take a long time and sometimes they take a short time. It's just you don't really know until it actually happens. A couple other charts here, GLD. I mean, this was a huge failed breakout, and especially with the kind of candle that we got here. Another doji candle in the stock or in the ETF. A little bit above average volume today. This one, I don't really see a trade that is ideal for either a bull or a bear here at this point. You could have some price resistance where it's currently sitting at here, as it has been tested here, and then again here and here and here as well. So there could be a little bit of resistance to move higher. You got this downward trend line that I still think is in play. You just had a head fake outside of it. And then a couple other stocks. I talked about KERX on my Twitter feed late in the day. There was folks, in fact, Twitter started lighting up about KERX being a great end of day runner here. And what I'm going to do is I'll pull up the 5-minute chart on it. And I actually went against the consensus out there saying that I don't think it's going to do much of anything. And the reason why people were starting to get interested in it was because you had this late day breakout. Well, you can see here in previous breakouts today, I mean, it broke out here, 456, and it goes to 478, and then it breaks out here and just goes from like 479 up to 487, and then again here, from 488 to $5, and then it doesn't really do anything here. So my point being is that the stock actually, the breakouts, the intraday breakouts that it was seeing was getting weaker and weaker by the breakout. And so when we got this one here, it looked a little too good to be true for me. And $5, I just, it broke out and it goes to 508, and then you could see right into the close, boom, drops. So I mean, you didn't get hammered if you took the breakout play, but it just goes to show. I mean, that stock was pretty darn tired going into the close, and it was I would categorize it as a head fake, quite honestly. And then a stock that I analyzed a couple of weeks ago, telling people to be very to start getting interested in the IH and S pattern that was forming in it. You had the left shoulder, the head, the right shoulder, and things worked out like a charm. There's probably a good chunk of you. I know there's a good chunk of you guys that bought into it, and you probably aren't in it now because on Friday it just gave you a great profit opportunity to get out. But even with today's candle, which is a bit engulfing to the downside, I don't necessarily know if the story's over or not, because you can draw a trend line here and it still looks pretty healthy. I mean, you'd hate to hold it and for it to come all the way back down, but I wouldn't necessarily say that the stock is done doing its thing until it does break below it. So but yeah, overall, I mean, I think the trade worked out great. This kind of volume that was flowing into it is usually a good opportunity to get out of it, because those high volume spikes represent blow off tops oftentimes. So and even when they're not, they usually do see some kind of a contraction afterwards, so that's usually a good time to take your profits. But I mean, I think this trade still holds. I think the easy money though has been made in it at this point. And TVIX, this is my one holding that I've been building up, and I'm not gonna bet the farm on it or anything, but it is a pretty volatile beast until of late. I mean, goodness, I mean, you look at it recently, and how many times has it really consolidated this tightly like it has right now? There's really none, and given it's not even been around for 2 full years yet. But despite that, though, you don't have a lot of tight consolidations like what we saw today. And the thing that TVIX shareholders are seeing right now, and by the way, they are not issuing new shares of it, so that does create somewhat of an escalated demand if this market does start, in fact, moving higher or moving lower, and panic starts to set in or fear starts to set in. This thing will probably go up a lot more than what it would typically do in a normal situation, just because they're not issuing new shares, so that people are actually having to fight for these and have to bid up the price to get the sellers to give them away. But in any case, I mean, I don't recommend people trading this, just anybody. It is a pretty gut-wrenching trade. I don't particularly love these kinds of trades, but if you time them right, they are very profitable. And you can see here, this tight consolidation is could very well lead to an upside breakout, particularly if the market does break down like I expect it to sometime in the next century. I know, I'm just joking. But in any case, so I do think that this stock is coiling very tightly for an upside breakout. That's why I'm still holding it. I've added it to my position a couple of times, not doubling down, just adding to create a full position eventually. And that is about it. We got a brand new chat room. It's free. It's awesome. It's powered by Trader OS, the charting and the real-time futures and forex, and I highly recommend it. I highly recommend you guys jump in there and make the best of it. That's going to do it. You guys have any questions, always feel free to hit me up in the chat room or email me at ryan@sharepointer.com, and I'd be glad to help. Y'all take care.